Okay, so guys, in today's video, I will walk you through how to get your directional bias using just market structure. By understanding the concept of market structure, believe me, you'll be getting your directional bias very easily, right? So let me walk you through. This is silver. I'll be using silver. So on silver, okay, so basically before let me explain the concept of market structure, right? So we are told market creates higher highs and higher lows, right? So higher highs, higher lows, higher highs, higher lows, higher highs. So this is just the basic market structure, right? Then the advanced market structure, we are told um, price makes higher highs, makes a pullback, breaks, take out this high, comes back to this low, and then sometimes create something like this and take out this external high again, right? So looking working with this now, let me work with this advanced market structure, right? So whenever we have this, let me take this, let me move this, let me move this, right? Okay, so whenever we have this for the advanced market structure, after this break, market comes to seek liquidity, right? Market comes to seek liquidity. So these are the break of structure, right? These are the break of structure. So if you watch, this is the first, this is the last pullback before this break, right? So price will take this as the internal range liquidity, right? Price will take this as the internal range liquidity, and also this thing here now, this pullback is just the same thing like this side, right? So let me assume we had something like this here too. Um, yeah. So as you can see, I just added that part to the diagram so you understand what I'm driving at, right? So you see, after this break, market gave a pullback and broke another structure without taking any liquidity. So this pullback becomes internal range liquidity price will take. Now, some persons will see this as a change in character, but in real sense, it is not a change in character. Now, also this will also bring me to higher time frame structure and lower time frame structure, right? Major and minor structure. So on the higher time frame, daily, weekly, and 4 hour time frame, this is just an internal range being taken out, right? But on the 1 hour and 15 minutes time frame, this is more like a change of character. So but that is why I usually advise you check your directional bias from a higher time frame and work with that as a day trader, right? So for this part of the diagram now, this becomes our internal range liquidity price will take, right? So price will take this internal range liquidity and continue the buy. The only time we would say market has changed direction on the higher time frame is when price takes out this low. When price take out this low with a full body candle, right? Not with a wick. So if it's just a sweep, then we are still bullish. But if it's with a full body candle, then we are bearish, right? So to continue the buys, price will come like this. Price will make a move like this. We'll take this and then continue the buys, right? So if you come to the market um and you meet the market structure at this level, right? So what the first thing you should be expecting is for this low to be taken out. And the honest truth is market is dynamic, right? Even if I've said this low should be taken out, market will not just come boom and take out this low and continue buying. No, you might see market doing something like this, reacting from this breaker block, taking a short buy, and then before selling, right? The market is dynamic. There's no fixed pattern the market follows, right? We might have something like this, and then before we start buying again, right? So that is just how the market moves. So with this understanding now of the advanced market structure, now let's see how we can apply this to finding our directional bias. Right, on silver, let me clear my chart. Okay, so on silver we had this break of structure here. On silver we had this break of structure here, right? We had this break of structure here. We had that break of structure, and like I told you, price just pulled back to react from some. If you go to the lower time frame, you see something here price reacted for and continue selling. Right, so that was the first break of structure we had. Then this was the second break of structure. This was the second break of structure. Right, that was where we had the second break of structure. Now this is a sweep. This is not a break of structure. This is a sweep of liquidity, and then we had this is a sweep of liquidity, and then we had the change of character here. This is where we had the change of character. And as you can see, after that break, price came back to that breaker block, this which is this black bearish candle here, and continued buying from there. So now what this tells you is now this is how you now frame your directional bias, right? So this break, we had this break, we had this pullback, and then we had this drop, right? We had this pullback again, and then we had this drop, right? This is a sweep now, not a break. So what does this tell you? Price is coming for this high. Let me take this out so you see. Now this is what it looks like, right? Now notice this is not a pullback. This bullish candle you see here, this is not a pullback. Why is this not a pullback? Because this bearish candle did not take out the wick of this bullish candle. I didn't mean we had something like this drop here, this drop, this pullback, then price takes out this high. We would have considered that as a valid pullback, but it's not a valid pullback with the way it is. So I just wanted to point that out. So now if you watch, this is where we had the break of structure, right? We had the break of structure here. We had the break of structure, price pulled back, reacted from here and dropped, and then we had the sweep of liquidity here. Now whenever we have a sweep of liquidity, the low, alright, the lower low that formed that liquidity becomes, that sweep becomes a weak low. So what that means is this zone now becomes a weak low, right? Which is this zone, which is here on the chart, right? Which is here on the chart. So price took it out and continued buying, right? So if you watch, this was the candle. Okay, let me show you something else. Now there's what's called single candle inducement, right? This is where we had the break. This is where this low was taken, and immediately that low was taken, price fought back and created a single candle inducement. This is it here. This place here is a pullback, right? So that was what price came to take out. Price took it out and continued buying. Now, what does this tell you? Looking at this, let's come back to this now, right? So price took this out. Normally, price is supposed to continue selling, Like I told you, price is market is very dynamic. Either price could continue selling or will continue buying. And for this our case, after price took out that low, right? After price took out this low, instead of selling, we continued buying, which is this buy you're currently seeing, right? So after that we saw a break here too, right? We had a break here, we had a break here, yeah, we had a break there. So from this diagram now, what does this tell you? Where is price coming for next? Let me show you something. Okay, so from here now, let me take this off because price did not after taking that, price did not continue the sell. So immediately price came here, we took out this low, this high rather. We pulled back and continued selling. So what does this tell you? Where is price coming for next? Price is coming next for this high. Why is price coming for this high? Because this high did not take any pullback, right? This was the first break. Why is price coming for this high? Because this high did not take out any pullback. This is not a pullback. This is a pullback. This is a pullback, right? This is a pullback. Now, this is where price is coming for next, right? I didn't mean this high now. I didn't mean this high took out a pullback. If there was a pullback here now, I would have said, okay, price might not really get to this zone, right? Now, now, why we have our directional bias as this? Now, this was how I was able to frame my directional bias for the week that just ended, right? So I noticed this as a single candle inducement. Is a single candle inducement anyway. Then I was expecting a sell into this zone, right? And then we'll continue the buy, right? Yes, I know we are bullish, but a sell opportunity can come up and then we can grab it. Let me show you how I got into the sell on the 1 hour time frame. Yeah, on the 1 hour time frame. So this was the pullback I was expecting price to take out, the single candle inducement. This is what it looks like on the 1 hour time frame, and on the daily time frame I've showed you already. So how I got into the sell was from here. I got into the sell from here, from there, and I was targeting that low. This was my sell. I shared this with those in my telegram, and then we sold down to this zone. That was our take profit. And as you can see, immediately price got there, we reversed. Price bought from this candlestick here. This is the candlestick price bought from, and as you can see, that is where we bought from, right? Now I got into the buy again from here. From here, I got into the buy again from here, and this was the 1:4. This was the 1:4 trade. I remember because I was bullish overall. That was why I took this buy from here. It was the 1:4 trade, right? Now let's go back to the daily time frame. Let me show you something else. Now from the daily time frame again, right? From the daily time frame again. Now let me share with you my directional bias for the next week. For next week, right? For the week that is coming. So yeah, we had this. Then for the week that is coming, here's what I'm anticipating. Price might come to this low. So this is where we had the breakup structure, right? So price might come to this low to take out this low. This is Thursday's low. Price might not get there, but Friday low, I'm very sure price is coming for this low, right? So for next week, this is how I'm framing my directional bias now. I'm not using the weekly time frame anyway. So my highest time frame is the daily time frame. So I'm expecting price to come for this low. Why am I expecting price to come for this low? Now I know my overall target is this high. This is my overall target. But like I said, price will not just fly boom to this high, right? Price will need to come, make some move, take out liquidity and the rest of that, right? So this is my overall target. Now I'm expecting this low to be taken out. Now from the 4 hour time frame, let me show you why I'm expecting that low to be taken out. So let me show you something from the daily time frame. For those that understand key level, I'll be making a video on key level. So if you've not subscribed to this channel, do it to subscribe. So that is a key level, right? That is a key level. Some persons for some swing traders will be taking their trades from this zone. This is an inducement. This is an inducement, right? For those that trade key level. So that's an inducement. So I'll be expecting a sell into this zone. And for those that trade CRT, you see this is a sweep, right? This is a sweep, right? That is a sweep. So definitely price might come for this low, but I doubt the price will get to this low. Might just buy from somewhere around there. So, but I'm expecting this Friday's low to be taken out. Then from the 4 hour time frame, let me show you something from the 1 hour time frame. Is it 1 hour time frame or 2 hour? 1 hour time frame. Yeah. Now from the 1 hour time frame, see price did something. We moved from here. Price is reacting from a 5 minutes order block somewhere around there. Then we move from there. This is how I usually frame my bias, right? So we moved from here, we got here, right? Price dropped, moved and dropped again, right? Now look at this. This high was not taken. What does this indicate? A shift in market structure. This indicates a shift in market structure. So this is like a shift in market structure. So by next week, if I see a clear break of structure from here, if I see a clear break of structure from here, if I see a clear break of structure from here, I'm selling silver into this zone. I'll sell silver into here. This will be my final target for silver, right? The reason is because we had a break of structure here. This is where we had the break of structure. Had a break of structure here. So this is like a key level price can buy from. And if you check the 4 hour time frame, let me check the 4 hour time frame. Yeah, so you see price can buy from, there are two places price can buy from, either from this zone, either will buy from this zone, which is the first zone, or will buy from here. So either of these two zones price will buy from, and then this will be our overall buy target, right? This will be our overall buy target. So that is what I'm expecting on silver for next week. So you see how easy it is to frame your bias, right? Just with the understanding of market structure. Just with the understanding of market structure. Now, if you come to the 4 hour time frame, if you come to the 4 hour time frame now, you see why price came for this low. See, let me show you. We had the break of structure, right? This is internal break of structure. This is an internal break of structure, not external. This is where the external happened. This is the external break of structure. For those that trade double break, you should understand what I mean. So this is more like the double break of structure. This is the internal break of structure, right? So, but working with the internal break of structure, where was the first pullback after this break? This is the first pullback after the break, and then we had another break of structure again without taking any inducement. So this first pullback, alright, this pullback here now becomes an inducement. Let me show you that diagram from the daily time frame. Where's that diagram I drew? Hold on. Okay, this is it, right? This first pullback, the same thing that happened there now. See, everything, let me go. One thing you should understand is whatever that is happening on the higher time frame is the same structure that is happening on the lower time frame, but the only difference is that it happens at different interval, right? It happens at different interval. Now, that this first pullback on the higher time frame, which is this first pullback, it did not take out any previous pullback, so it becomes a weak low, right? It did not take out any previous pullback, so it becomes a weak low. I didn't mean this was a valid pullback and he took it out. Price, I won't be targeting this low. Now let me show you something from the 4 hour time frame too. Let me show you something from the 4 hour time frame. Good, good. Look at this. Come, look at this now. See, this is a pullback, right? This thing now is a pullback. And because see, we had a break of structure here now. Look at this break of structure, right? Price made a pullback. We did a pullback and then continued going up, and then price came and took out that pullback and continued buying and broke the structure. That is why this drop, this sell that happened there, it did not get to this low, so this low now becomes a protected low. This low now becomes what? A protected low. So anytime in the future price take out this low, we say we will now have a full change in market direction, right? Or anytime now this low is taken, we now have a change in market direction. I don't know if you understand my point. Yes. So the same thing that happens on the lower time frame is the same thing that happens on the higher time frame. The only difference is that for the higher time frame it takes longer time for it to occur, but for the lower time frame it takes shorter time. So that is just the basic difference. So as I've already told you, I'm expecting price to buy into this zone, which is that higher time frame first pullback that did not take out any previous pullback. There was no pullback here that this high took out. So that is why we are buying into that zone. So for silver, I am very bullish on silver. So, but if I see a sell, I'm definitely taking a sell, right? I believe this video has helped you understand market structure and framing your buyers using just market structure. And don't forget to subscribe to this channel because I'll be dropping more detailed videos like this on key level. I know some persons will not understand when I'm saying key level in this video. So in my subsequent videos, I'll be explaining key level. I'll be breaking it down so that you understand everything about forex trading and how to become a profitable trader. See you in my next video. Peace out.